Walmart just had earnings today. Now, as if I'm recording this, I have no idea what their earnings will be. However, you guys will probably know by the time you guys see this video, but it's going to determine a lot of stuff, especially when it comes to the retail sector, guys, or at least the retail industry, because, well, we just saw Target rally massively yesterday at 17% with subpar kind of numbers. Very, very curious as to how Walmart did today as when their earnings came out. So with that said, I want to take a look at their overall fundamentals so that way we can see if maybe right now Walmart is a buy at the current price. So with that said, let's get started with this analysis. So now let's jump into the calculator. We got the ticker for WMT, market cap of $457 billion with a PE of 32.69 and a current share price of $169.78. This price, guys, it is up 13.71% on the 1 year and up 18.23% on the year to date. In fact, this is so incredibly high that we are at 52-week highs when it comes to Walmart. $136.09 for the low to $169.94 at the peak. As of today, so if I'm recording this, it is November 15th. Post-market, this thing hit even higher at $170.21. So as it currently stands, just based off of that, I'm really not liking this from a valuation standpoint. They do pay out a dividend of $2.28, which is a yield of 1.36%, a payout ratio of 4.66%, 5-year CAGR of 1.86 with 49 consecutive years of dividend payment. Ex-dividend date is actually coming up on the 7th of December. Payout date will actually be next year on January 2nd, and they do pay their dividends quarterly. And of course, based off the current shares outstanding and this $2.28, they pay out, guys, $6.14 billion in dividends every single year. After this is subtracted from their 5-year average free cash flow, they're left with $10 billion. And as of their last year's free cash flow, they're left with almost $6 billion. These payout ratios are 51.22 for the last year's free cash flow's payout ratio and almost 38% for the 5-year average, significantly below what I like at 60%, which is a great thing because they can actually afford this dividend. Looking now at the fundamentals on the 5-year scale, net income 5 years ago of $6.67 billion to 1 year ago of $11.68 billion. That is an increase of 75%. You can see that's kind of stabilizing right here 3 and 2 years ago during COVID. Come down though, but it hasn't come down too much. I'm going to say, guys, I would think like a 75%. The free cash flow could be looking a little bit better. 5 years ago of $17.41 billion to 1 year ago of $12 billion. That is a decrease of 31% from an average of $16.16 billion. You can see that their outlier year was 3 years ago during COVID. Not surprising. Walmart was one of the few ones that was allowed to stay open because of the regulations during then. But then they came back down the following year, $11 billion. And so far, they are increasing it. However, not to the extent that I necessarily liked it. So I'm going to have to say, guys, like a 50%. I don't necessarily know where this is going. The revenue is looking absolutely perfect. 5 years ago of $514.4 billion to 1 year ago of $611.3 billion, increase of 18.83%. The line of best fit hits the graphs every single time. This is a perfect 100%. The assets minus liabilities aren't perfect, however, they're still in the positive and somewhat continuously increasing. Small dip from 2 to 1 year ago, but all in all, it's still recovering. Average total assets being $246.4 billion, average liabilities being $160.3 billion, with a difference of $86.1 billion. I'm going to have to say, guys, a solid 90%. The cash flow minus liabilities could be a little bit better, as you can see right over here. It is decreasing, and we are a lot lower than that of the average, with the average being $138.2 billion and 1 year ago being negative $147 billion. And they did have 1 year where they did increase it, but all in all, it is consistently decreasing. I'm going to have to say, guys, like a 40%. The shares outstanding is looking amazing, as you can see, perfectly consistently decreasing even during COVID and even today. 5 years ago of 2.88 billion shares to today of 2.7 billion shares, decrease of 6.5%. Previous year to the current year, 0.05%. Guys, perfect 100%. And lastly, they currently have $13.88 billion on hand with $12 billion on average. Overall grade of 76%. It's Walmart. It's a pretty passable grade. I really wish it would be a lot higher. However, 76, it's honestly there. Main problem though is their free cash flow, which once this gets fixed, this will also be fixed as well. Taking a look at now the discounted free cash flow, not inputting anything, we got $35.59 and adjusting for that $21.07. Guys, current share price is $169. So I highly doubt that whatever numbers I put in here, it'll get near this thing, especially since we are at all-time highs. But let's entertain this. For the predicted share buyback, let's say something along the lines of like 3, then let's say 4, and then let's say 5%, not 6%, sorry, 5% on that one. And now for the overall revenue, well, Seeking Alphas tells us that growing at around 5.27%, and the sector median is also 5.1. I think that's average, honestly. So let's input this as 5%. Let's input this as 4, and then let's input this one as 6. With this, we get $42.25 to $46.20, adjusting for that $27.29 to $31. Margin of safety of 5.10.15, $23.20 to $29.39. Guys, it's looking massively expensive. Not only are we at 52-week highs, but the PE is also very, very high too at 32.69. Now, granted, guys, I am not saying that this is what the company is going to. This is what the company's value should be, right? Doesn't necessarily mean that the stock price will fall there. None of this is financial advice. As I say in every single video, and every investment is the present value of all future cash flow. So please do your own due diligence. Calculators available for free. Only thing we ask for is, of course, like, subscribe, comment. Really does help here on YouTube, guys. Really is all we're asking for. And, for that, guys, we're giving you free content, right? Live streams, free calculators, all this stuff. So really is all we're asking. The goal, it is 3,000 subs here on YouTube, and on Rumble, y'all guys crushed it already. So congratulations on that one. So again, guys, if you enjoy what we do, best way to help us is, of course, like, subscribe, comment, and of course, share. Now, looking at this dividend, putting in $5,725, not a high yield, which means that it's only netting at $76.89. Could be a little bit better. And when taking a look at the options change for November 24th, let's take a look at next week, just because, well, I mean, this week we have Thursday, which by the time you guys see this video, it'll already be over, and Friday. So let's take a look at November 24th. We could see that there's a decent amount of premium here, especially since, of course, and now that you guys saw earnings, if you did buy into one of these puts, if you sold one of these puts, you did get a decent amount. You can see for a strike of $162.50, $78. For the calls, this looks even better. So you can see $170, $315. Granted, this is already in the money, as you guys saw, right? However, for $177.50, $78. So might be something that you will consider if you want to, or if you have 100 shares of this company, you could sell a call, or if you want to buy this company at a much lower price, you can just sell a put and see if it executes. All in all, guys, it is Walmart. It is a major staple when it comes to the United States economy and, of course, the consumer. We'll see what the earnings say, and, of course, we will cover them. I don't know if we're going to have a live stream today. Obviously, if you guys see the thumbnail, then, if you guys get it on your feed, then congratulations, we got a live stream. Most likely not, though. I think I will just do a video on my own covering the overall earnings for Walmart and maybe another one that had earnings say. But anyways, that pretty much does it for this video. Make sure to like, subscribe, comment. Really does help here with the algorithm on YouTube as well as Rumble. Make sure to follow us on the new tech sites, which is Rumble. Link is in the description below. So with that said, peace out, and we'll see you all next time.